Hey, welcome back. Jeb Smith, Coldwell Banker Residential Brokerage in Huntington Beach. Today I have my lender here, Josh Lewis with Buywise Mortgage, and I wanted to take the videos down a different path. I've been doing a lot on real estate. I want to talk about lending because it's a huge piece of the puzzle when it comes to buying a house. And you know, one of the questions I often get solicited as a realtor, quite often in fact, about direct lenders and the difference. And you're a broker,
yep.
So I guess the conversation today we're gonna talk about the difference between direct lenders and brokers. So. Yep. Well, why don't you just take it? Let's talk.
So a lot has changed over the years. Things just change in where the market's at. So we go back, I started doing this in 1995. The company I worked for was a direct lender, MGM Mortgage. We were in Orange over off the city drive, and it was a great place as a loan officer to start and learn because we were a direct lender and everything was in that location. My underwriter, two underwriters, they were both right down the hall. Docs funding down the hall the other way. So the owner of the company who'd been in the business for 20 years down the hall. So any question you had or anything you needed could be resolved immediately. We were the in-house lender for Prudential California Realty out in Anaheim. And the thing that we were known for, we didn't have sort of the waiting period that we have on purchases now, but a deal would fall apart. We could put it back together in 2 days because I would get a copy package, put everything together, run it to my underwriter. They would underwrite it. We'd send it over to docs. Docs go out. Now that's not so much possible. So that's the good side of a direct lender. And funny thing is, 25 years later, 27 years later, whatever, 22 years later, people still have this perception that a direct lender has that ability. They really, really don't. In 2013, there were some federal guidelines changed that made it disadvantageous to be a broker, or at least on paper, it looked a lot worse than what it actually turned out to be. So at that time I said, hey, feel pretty strongly that the broker channel is better for me, better for the borrower, but with the changes to the guidelines, we went over to a good direct lender. And what I found really quickly there is our office was at Fashion Island in Newport Beach. Underwriting was in Scottsdale. Docs was even further back east. So the thing that first immediately struck me is it's not a whole lot different than being a broker. So as a broker, we process the package, we put it all together, we send it out to another office electronically for underwriting, and then it's approved in the docs and everything happens there. So people still have this perception that, hey, I'm going to a direct lender, it's all there in one spot and they all talk.
Okay, so you mentioned a moment ago that you are a broker primary because you have the option, right? You could go work for a bank.
Absolutely.
You could go work for a direct lender, but you choose not to, right? And with that being said, it could be a lot less headache to go work for somebody else, right? Because currently you're running your own business, so you don't have to deal with accounting, you don't have to deal with employees, you don't have to deal with that. You go in, you do your job, you leave.
Yep.
But there's a downside, right? Which you mentioned a moment ago. But the upside for you and for let's talk about the buyers. What's the upside from the buyer perspective with a broker?
So you and I were talking a few minutes ago. Fannie Mae released some numbers yesterday that 40% of borrowers, so whether they're refinancing or buying, don't comparison shop. Not even one. Not talk to one additional lender. They look at a number, they go, it looks good, let's go ahead.
Right.
So as a broker, realizing that 40-50% of our clients are never going to shop, that's what my job is. I shop. If I work for a direct lender, this is what I have. If I work for Bank of America, this is what I have. This is what the terms are on a day-to-day basis. As a broker, I've got 20 different lenders. And not only that, I can shop 200 different lenders. There's generally not enough difference among all of them to make it worth maintaining 200 different relationships. So we've got 20 different lenders that we work with. We price out all 200. We look at that and we go, what is the best combination of lowest rates, lowest fees, and best service? Because we have lenders that have amazing terms, and the borrower and myself will want to hang themselves by the end of the file because it's that difficult working with them. So it looks good on paper, and that's a lot of what you see when you're doing the online teaser rates, when you look and someone's saying, wow, how's that lender 0.25% lower than everyone else in the market? Because they're awful to work with. So that's really what our job is to maintain relationships with as many good lenders that are good to work with, easy for us to work with, easy for the borrower to work with, and is getting excellent terms and low rates. So that's the benefit of working with the broker. We have that ability. And the downside in the past, and especially in 2008, 2009, everyone made brokers out to be the problem. Brokers were doing this, they weren't responsible, they were sending the loans off. And what you saw, I mean, you remember this, the realtors would insist on a direct lender pre-approval to come in there because there was some sort of feeling like this is different, like an underwriter is actually looking at the file. It's no different. The origination process, the loan officer gathering your documentation, putting the file together and telling you you're pre-approved is no different. Broker, direct lender, bank, they're all doing it the same.
Right.
Unless there's some big question, we're not putting that file in front of an underwriter. We can do a TBD approval just like a bank can, just like a direct lender can. So borrower comes to me, they have a weird employment history, income changed, we've got questions. We had a gentleman that right now we're getting ready to close in about 2 weeks, that there were some big questions with his child support. And I'm like, well, this is easy. Let's just package the file up, send it off to the lender. So we're not a direct lender, we're a broker. We send it off to the lender, and in 2 days they come back and they go, yes, we'll do the loan, but we need this, this, and this. So before he went out with his realtor and started looking for properties, we got all those things in, and we were able to give a full underwriter approved pre-approval for that borrower. And you know how it is. It's getting more and more competitive, or it's been very competitive for the last couple of years. So a lot of times, if we have the time, we might as well send it and get a full underwriter approval.
No, absolutely.
Just so that you can go out. I mean, we're going to write 2 different pre-approval letters. One is, I've reviewed everything and they're totally good. And a good realtor is going to be able to see, based off of the proof of funds, the proof of credit scores, the DU findings, which that's just automated underwriting findings.
Right.
So the realtor can look through and go, here's my debt to income ratio, everything looks good, I don't think I have any questions. So 9 times out of 10, that's enough when you have a good realtor. But when they're getting 10, 15, 20 offers, never hurts to say, hey, this file's already been through underwriting. Underwriters reviewed credit, underwriters reviewed assets, income, and basically all we need is a preliminary title report, escrow instructions, and an appraisal, and we're ready to go. And that doesn't change from broker to bank to mortgage bank or direct lender.
Okay, so one thing you haven't talked about, or not really in detail, or is that you as a broker have not only more banks to choose from, but with that becomes more options in a loan, right? So if I walk into my local credit union, I'm stuck with the products that they offer, the rates that they offer. You, on the other hand, not only are you able to shop rate, but you can also shop programs that your traditional banks may not have, right? So your traditional banks may not have an asset-based loan. They may not have the option to use some sort of bank statements. Broker, they have that option, right?
Absolutely. So, and they're generally different lenders. So the lenders that are doing bank statement programs, I mean, some of them will do both, but we have 5, 6 lenders, they do what's called non-QM loans. They don't meet the traditional guidelines, but they're comfortable with that. So if we have a self-employed borrower that shows, $10,000 a year income, they don't qualify, but their bank account shows $50,000 a month going through there, we can get that person qualified with one of those. And if you walk into a Bank of America, if you walk into a Chase, they're not going to be able to do that. A credit union's not going to be able to do that loan. So, when you look at it from that perspective, we've got more options. We're able to shop for you because most people are too busy to shop themselves. And I don't mind if a borrower wants to shop and say, hey, I just want to get a second opinion. Cool, because I know I am not the cheapest lender. I don't want to be the cheapest. For us, I say, people always say everyone wants to be the Nordstrom of everything. Well, Nordstrom's fairly expensive. You can get nice stuff. You can get the things you can get at Nordstrom at other places. We really want to be the Target. Everyone shops at Target. Your wife shops at Target. My wife shops at Target. Bill Gates' wife shops at Target. Because you're getting a good price. It's not the lowest. You could go to Walmart. You can go to the 99-cent only store, and you're not going to have. So our goal is to give you a great experience with really fair pricing. So long way of saying, if someone shops, we may not be the absolute lowest. We'll be close enough that our experience and what we've had with that borrower, the experience they've had with us, we don't lose in those situations. So I always say, look, if you have a feeling that these numbers aren't the best numbers, as an example, Scott, my business partner, a buddy of his says, hey, I want you to talk to one of my co-borrowers. She's looking to refinance. She got 3 numbers. She got numbers from it was Bank of America and US Bank. So 2 big national banks, and then one of the big call center lenders. All 3 of the estimates that she had were tragically wrong. There were flaws in them that were not accurate. The numbers were all over the place, and they were going to change, and that's just the nature of the beast. So when I say that, people think going to a big bank, well, there's safety in that. They wouldn't hire, there's liability, they wouldn't hire someone that doesn't know what they're doing. And there really isn't. So you can have problems in any channel, including with the broker. So,
no, for sure.
So at the end of the day, what I say, the most important thing, even more so than shopping terms, to make sure you have a good experience is a good experienced loan officer. And a lot of times that's really hard for you to tell. As a borrower, what are you in the market once every 5 years, 10 years?
Sure.
It might be your first time ever. You don't even have a frame of reference for comparing. And a lot of times people will say to me, well, why does my realtor want me to work with you? Why do they keep pushing so hard? I talked to this guy online. Are they getting a kickback? That was the one we used to always say. Are they getting a kickback? No, it's illegal. We can't pay you money for referring people.
Right.
But you deal with this every day.
Well,
you've vetted loan officers.
No,
I'm not the only good one in the world. Like a lot of times you'll say, hey, I got this pre-approval letter. I don't really want to push them your way. I've dealt with this guy or girl before, and they're good.
No,
and these are good terms.
And with regards to that, we're going to do another video and talk about, top characteristics in brokers, in loan officers, because all these guys aren't the same. Even if they're offering the same rate, they're not the same, because there's a handful of things that you as a realtor should look for it in your loan officer, in your mortgage professional, and as a buyer you should look for. So we're going to do a separate video on that where we discuss those things. But I think that today that gives people a pretty good idea of what brokers offer versus direct lenders. And even if you decide to go to a broker, it's still, just because you're going to a broker doesn't mean you're getting the best rate, right? Because not all brokers are the same. So, like Josh mentioned, it's okay to get multiple quotes from multiple people, and he even suggested you do that. And I would tell you the same thing. Just make sure you're getting the best deal, the best fees, the best rate. And with that, you need somebody that knows what they're doing, so you need service. So just, if somebody offers you a super low rate, but they never pick up their phone and they can't deliver on what they promise, what's a rate in that? So
at the end of the day, it's another refinance seller shopping around, big major name lender who also has an office here in the same building as us. They sent over the numbers. Interest rate was good. We look at it and we're like, okay, well, let's take a look at it. When we get their figures, they were $2,700 higher in fees. So it was a good interest rate. It wasn't a terrible loan. It's a $600,000 loan. $2,700 is not the end of the world.
Right.
But if they hadn't made that additional call, they're paying $2,700 extra. So what I would say, $2,700, if you're equally comfortable with both people, well, then $2,700 is a deciding factor.
no, absolutely.
If it's $300 and one guy seems a little shady, or he's an online lender and you just don't have experience, or your realtor doesn't have a relationship with him, you don't chase after $300, $400, $500.
Right.
You want a good fee with someone that you're comfortable with, that people in the transaction have worked with before.
Oh, absolutely. So what I'll do is I'll link Josh's information below. If you have questions, you're getting pre-approved, you're looking to refinance, you can call him directly. And as always, appreciate you watching the videos, and we'll see you again soon.